it is not just the fact that they have a moat, it's the fact that that moat has a quantifiable value on it. If Nvidia or Apple or someone were to try to get into the market at the current level that Strategy is at, I don't know if it's possible. Coinbase's inclusion is good, but I don't know if it necessarily impacts Strategy. What I do think it gives is it gets the market more comfortable with the thought of these kinds of institutions existing in the S&P 500. We're not going to have like a FTX kind of situation. Here's why. FTX was unregulated offshore. They were just doing whatever the hell they wanted to do. They're regulated by SEC. They have to go through internal audits. Business is business. Some of these companies that are adopting this model, a couple of them are going to fail. It's going to happen. It's just the law of averages. But that doesn't necessarily mean that it's a bubble or it's going to create systemic risk. One company failing or two or three and them having to sell some Bitcoin, that says something bad about the company and how they manage the strategy. That doesn't say anything bad about Bitcoin. I think the dynamics are different this time around. I know we say that every cycle, but I do think that things are fundamentally different this time around.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. I'm in the studio this week, as always, with my co-host, co-founder, CEO of Acropolis, Chase Palmieri. And this week we are joined by a really great guest that I'm excited to interview, Adrien Morris. He's a member of the MSTR True North crew. He's a MicroStrategy bull analyst. We've had a lot of the MSTR True North guys on our show. We've had Ben Workman, Tim Kotzman, Dan Hillary, and others. So excited to have you join as well. Welcome to the show, Adrien.
Thank you. Thanks for having me. Happy to be here. Been looking forward to this conversation.
Absolutely. Let's go ahead and get it started off with, can you share your theory on the emerging Bitcoin economy forming around strategy?
Sure. So this is something that we actually touched on in our True North event at Strategy World, and this is something that we've discussed, pretty at length on our Wednesday live streams. The overall thesis I have behind it is that what Strategy is doing is they are essentially Trojan-horsing Bitcoin into the center of traditional finance. So we have, Bitcoin underlying the equity, right, of Strategy, and then that is performing the screen like the base layer of this new economic system, this new economic model that's existing at the heart of TradFi with Bitcoin at the center of it, right? And then we have, Strike and we have Strife on top of it, essentially operating as those dividend plays that exist on top of the common stock. In addition to that, we have the options market that is, as I'm sure you two know, massive, right? The options market for Strategy is just completely insane. Premiums are high, interest is high, open interest is high. It is truly it's truly been like a marvel to see how large it's gotten from, August 2020 to now. So that's that first layer. And then, on top of that, kind of adjacent to it, perhaps you can say, we have the leveraged Bitcoin ETFs, the MSTU and the MSTX. And now we also have another one that's I think a weekly leverage play as well that exists in this economic system that's growing. We also have the other options dividend plays with the MSTY and IMST existing as well. And then we also have, BMAX, which is an ETF that's giving you exposure to the convertible notes. And then we have OwnB, which is an ETF that's giving you exposure to companies that own over 1,000 Bitcoin. That, to me, does not seem just like a stock that just has different plays on it. That seems like an economy, because all of those plays are essentially making everyone in that market a passive Bitcoin investor, whether they realize it or not. And that is fundamentally different from something like, a Mag 7 stock that has levered plays or a Mag 7 stock that's paying a dividend. All of the offerings that exist in the strategy economy, as I call it, they all play off of one another and they all have interdependencies. Now, some people think that's a weakness, but I don't think so, because as strategy comes to the market with different offerings, and as they expand the offerings, that only creates more interest, in my view, long term, because you can bring in adversarial players, you can bring in cooperative players, and you can bring in all neutral players that are just looking to hedge. So the strategy economy, I think, is something that we're going to be watching over the coming years. That's only going to grow in scale, especially with Strike and Strife. I think those are the two game changers that, when they really scale up, is going to give the market a very, very different view on strategy.
Yeah, it's a really interesting point. People often talk about strategy as the securitization of Bitcoin, but now what you're talking about is the securitization of the Bitcoin security in a way. All of these other securities popping up around what has kind of become the kingpin or network effect securitized Bitcoin in the public markets, or at least the most important public market in the world. For those who were wondering how long it would take us to say MNAV, here we go. So, Adrian, we were talking a little bit before we recorded, and you wanted to kind of talk about how some folks are incorrectly thinking about MNAV as something that can be front-run or manipulated, similar to how there's this misunderstanding about the ATM equity offerings. So why don't you share your thoughts there?
So when we think of MNAV, so NAV is net asset value, right? And MNAV is the multiple that exists on top of that net asset value. Now, the question I like to ask people is, well, what is MNAV then? And what MNAV is essentially is a measure of sentiment, right? That's essentially what it is. Now, how do you front run sentiment and how do you manipulate sentiment? You can't really do it. It's something that is reacted to. So my opinion is that because so many have been belaboring the MNAV, much like they've been belaboring the ATM, what strategy is doing is that they're listening to the investors and they're starting to mention MNAV now. For instance, in the last quarterly call, it was a very, very large talking point. But what I would like people to understand is it is not as if Saylor can just let the MNAV run, as people are saying, as it's some sort of, effect that's going to take place that is just going to have this self-fulfilling prophecy. Sentiment kind of shifts on a daily basis. When I was before strategy.com launched with all of the metrics, myself, Ben Workman, and others were doing the calculations for NAV and MNAV manually, right? We were creating our scripts and we were producing the output. I've seen the MNAV go as high as 4.1, and I've seen it go as low as 1.9, and that's within like a 4-month period. How exactly does strategy manipulate that? They have to react to it. And I know people are saying that the ATM is suppressing MNAV, is suppressing price, and so on and so on and so forth. But there are so many different aspects to this market, to this economy that are at play. I think that strategy solely becoming reactive to MNAV and letting it guide their actions may cause the opposite kind of problem where you have MNAV as high, right? So that means sentiment is high, which means price is likely high, but you're not going to use the ATM equity offering to buy more Bitcoin at that time. So then do you wait for MNAV to go back down and lose that opportunity? See what I'm saying? I think strategy is very much damned if they do, damned if they don't. There's always going to be a cadre of people complaining whether or not they let the MNAV run, or whether or not they are issuing ATM equity offering at a very sufficient clip. So I just want to make people aware that MNAV is sentiment, and sentiment can't be really actively manipulated. It can only be reacted to.
So it's almost like you're saying strategy doesn't have control over their MNAV in the same way that Nvidia doesn't have control over their price to earnings multiple.
Precisely. Yeah.
Yeah.
And the statement I use is that MNAV is a calculation, not a commandment. It is not something that must be at a certain level to justify any action. Now, theoretically, could I say if the multiple is at 1, does strategy want to issue an ATM equity offering in that use case? I mean, maybe not. But what if we are in the midst of a bear market, MNAV is 1, they have the ability to issue ATM equity offering, and Bitcoin is at 75K? Do they say, no, we're not going to do it? Do you see what I mean? Like the decision is far more nuanced than simply saying MNAV is this, we can't do it because we may be signaling some kind of an adverse sentiment to the market, when the market already is showing you that you have adverse sentiment. So it's either you pause your plan or you go forward with your plan in a more, I don't want to say pensive fashion, but you still have to move forward with the plan. It's just a matter of how much would you do it.
Right, and you can imagine a world where strategy has an MNAV of 1, but Bitcoin is in a bear market, like you said, and they could be buying Bitcoin at lower than their current cost basis, in which case probably still makes sense.
And that, yeah, I mean, we could think that through, but yes. So say theoretically that is the case, right? We are in a bear market. The MNAV is at 1, but they have the ability to say right now the Bitcoin price action has been in a lull for weeks, months, what have you. It is an advantageous time for us to buy Bitcoin and even risk maybe trailing lower than 1, right? But again, that the MNAV is sentiment. So if we are in a market where sentiment is low, the only thing that can really change sentiment is either an announcement of some kind or showing that to the market that sentiment is low, we're in a bear market, but we're still executing. What is more harmful? Them saying that MNAV is at 1, we're not going to buy anything, and we're just going to sit on our hands until it changes? Or that MNAV is at 1, but we are still believers in this plan, so we're still going to execute regardless.
Right. I think that's really smart, but it's also kind of like you're saying that they do have the ability to manipulate MNAV at the same time to some degree. Maybe only at the pits of a bear market.
Well, that wouldn't be manipulating MNAV as much as it would be saying to the market that they don't care about MNAV,
Okay.
or saying to the market that regardless of what MNAV is, we are still going to execute. Is perhaps more accurate, right? If there's a situation where MNAV is low, I don't think strategy would like to use my phraseology that they don't care. But the reason why I say that they don't care is because regardless of whether or not MNAV is at 20 or MNAV is at 1, if they are moving forward with this plan, they need to execute. And it's just a matter of how aggressively they would execute in that scenario.
So one thing that we know MNAV does not take into account is what you could call the replacement cost, basically how much it would cost a competitor, say Apple gets involved to acquire the same position, these 500,000 plus Bitcoin. I'm kind of trying to introduce a new metric, which is maybe useless because it's an unquantifiable metric, but it's at least a conversation starter. And so I'm curious to hear your thoughts on it. But the new metric would be called MRC, so multiple on replacement cost. So I guess a two-part question for you here. One is, do you have a ballpark sense of how much it might cost a competitor to acquire MSTR's current Bitcoin holding position? And do you think that it's reasonable, if we could quantify how much it would cost to replace the coins, to be tracking something like a multiple on replacement cost?
So in a way, what you're referring to is strategy's moat, right? The sheer number of Bitcoin that they hold. Now, if we wanted to say, can we calculate what it's going to cost for a competitor to acquire the amount of Bitcoin that strategy has, we would just take the current price of Bitcoin, multiply it by 500 and some odd thousand, and boom, that's the cost right there, right? So in a way, what you're proposing is you're saying to people, it is not just the fact that they have a moat; it's the fact that that moat has a quantifiable value on it. And what kind of sentiment or what kind of a multiple would you give a company for having that kind of a moat? I don't think it's necessarily useless, but I do think it can be a data point for conversation, for perspective. If Nvidia or Apple or someone were to try to get into the market at the current level that strategy is at, I don't know if it's possible, because let's say hypothetically, Apple decides to do it and they decide to just drop $100 billion on the market in terms of Bitcoin purchase. One, how long until the price runs away from them? It is not as if they can go OTC with $100 billion and get everything at the same price, right? There's going to be a point where we reach a crunch where the price is going to start running away from them, and they're going to have to perpetually keep chasing that price to get to where strategy is going. Now, I could be wrong on that, but I don't think that Coinbase and Kraken or Binance has the kind of volume to, kind of absorb that, right? As a matter of fact, I don't even know if they can buy from Binance, quite frankly, with everything that's gone on with Binance that they want to. So I think that Coinbase is probably, their best bet, and then you have to go to Kraken. And what would happen to the market if a player of that size were to go in, right? So that's where the multiple comes in. I think you can say theoretically, for a player to get into the market at the same scale at strategy, what effect is that going to have on the Bitcoin price? what value does it ascribe to strategy, given the fact that they have this moat that is seemingly insurmountable? And how would that new player in the market affect strategy's perception? I think, quite frankly, that if that were to happen, that metric that you're mentioning would be quite valuable, because investors would say, well, strategy paid 50 some odd billion for all of their Bitcoin, while Apple had to pay 150.
Yeah, so that would be, in that case, a MRC of 3.
Theoretically, right? That's the way you can think of it. So I wouldn't go as far as to say that the metric is useless. I wouldn't say that. What I would say is that it gains use and utility when other players of scale come into this.
Right, because we need the counterfactual in a way. Like we need to
Precisely.
see how much it cost Apple to acquire, say, 200,000 coins, and then we can run that up to MSTR's soon to be 600,000 coins and kind of find the number that way. Okay.
And here's the thing with that: even if that were to happen, I think that would greatly benefit strategy, because if we take replacement costs out of it, we just talk about it in terms of sentiment, like we've been discussing, right? You have someone like an Apple, Nvidia, whomever is in the market at scale. Are they going to start doing what strategy did? Are they going to have their own version of Strike? Are they going to have their own version of Strife? Are they going to have as much open interest in the options market? I think that would be a given. So let me pin that one. Then do the leverage plays start changing? Do they potentially have other offerings that strategy doesn't have, because they have a different operating business in strategy? There's all kinds of different things that will come into play there. But even in that scenario, strategy's moat to me doesn't become invalidated. It just becomes a moat of a different kind, right? So, it's a very interesting thought experiment to think of what it would take for someone to come into the market at strategy scale.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. We're recording this the day after Coinbase was announced joining the S&P 500. Do you think that bodes well for strategy's inclusion later this year, or does it not have an effect?
Well, I don't think that Coinbase's inclusion would have an effect on strategy, because even though they are a Bitcoin adjacent company, I don't think they're only Bitcoin. They have altcoins, they have other things, right? They're more of a purely financial services company, is the best way I can think of it. Now, I think what's going on is that the market is still having a hard time classifying what strategy is. Yes, they can say that they are a Bitcoin acquisition company, but they still have the business intelligence vertical, which I think can be scaled and I think will be successful in coming years. So, in my mind, Coinbase's inclusion is good, but I don't know if it necessarily impacts strategy. What I do think it gives is it gets the market more comfortable with the thought of these kinds of institutions existing in the S&P 500. So when it comes to strategy, once Bitcoin's already over the price that they would need for inclusion, right? And if this price activity continues into June, I think they have a potentially good shot of being included, right? So and I can't recall, and this is something that Jeff has talked about, Punter Jeff has talked about, with regards to what potential politics can come up in with regards to S&P inclusion and whatnot. But if the Bitcoin price action cooperates, the chances of strategy getting included are very, very high. When can that happen? I'm not. I wouldn't speculate. I think it could happen by end of the year. If you want me to give a general understanding, because it didn't happen Q1, and let's say hypothetically Bitcoin, goes back down now in Q2, we're looking at Q3 or Q4, right? So that's why I'm saying end of year. And Coinbase's inclusion, in terms of perception, I think it's good, but I don't know if it's necessarily a prerequisite of any kind. I think that there will be two separate events.
And I believe it was last year where MSTR did a 10-for-1 stock split. At what price do you think, given its top performing equity, it will split again?
I would think that that would come down to sentiment and what makes the most sense tactically, really, in terms of how it would potentially impact the equity. So, we ran up to 2,000 before we ran up just above 2,000 before the stock split was 10-for-1, right? So I could feasibly think of another scenario where the stock is over 1,000 again, or maybe even approaching 2, and they would consider doing a split, but they have already issued or authorized more shares to be issued. So it's not as if they would, need to do the stock split. So I think that another stock split is going to be something that they're going to consider more carefully.
But you would agree that the reason for the stock split is so that you can create a wider group of people to participate in the options market, right?
A stock split would lower the cost of entry, so the barrier of entry becomes lowered. Then, in theory, you have more players that can come into the options market, and you can increase open interest because the price point is lower, right? Of course, that makes perfect sense. As a matter of fact, I think the stock split did a great job helping the open interest in the options market. So, I don't know I don't know how the market would react if they did another stock split so soon. So let's say we did one last year, right? And now end of this year, strategy is over $1,000. I don't know if it would make sense for them to do one again that soon. And even if we were to run up over $2,000 or something like that, I don't think that would be sustainable. We would have to assume a correction, correct, right? So a stock split is something that I think they would assess after things have settled. I think that after Strike and Strife were more established, I think if after, the amount of Bitcoin in their balance sheets would grow, we're up to 600,000, 700,000, whatever number it's going to get to. I think they would like to see those aspects kind of stabilized before they would consider something like a stock split.
Okay, and we had British Hodl on last episode, and we touched on Bitcoin income and kind of the ultimate Bitcoin maxi portfolio. And we see a lot of people talking about how, having Bitcoin, spot Bitcoin in deep cold storage, an MSTR position, and then maybe MSTY for monthly income is kind of a modern approach to the Bitcoin portfolio that takes into account all of the financialization we're seeing in the public markets. I'm curious, besides just selling down an MSTR position, is covered calls, whether that's with MSTY or an emerging competitor like IMST or I'm sure many more to come, but is a covered call strategy the best theoretical way to generate income on MSTR's volatility, or do you see there being some alternative approach besides covered calls that emerges?
I think that that's an individual decision, as corny as it sounds to say, and I say that for a few reasons. If you are someone that's comfortable playing the options market and you understand the options market, you understand the risks in the options market, and you understand that your shares can be called away in theory and you're comfortable with that risk, I would say playing the options market is probably a good bet. If you are someone that's not comfortable with that and you are okay with selling some of your shares and taking profits and using those as your, income per se, and you understand the tax implications for, whether it's options or whether it's selling, I think that's also a good strategy. But if you are a person that doesn't want to sell your shares and isn't comfortable with the idea of playing the options market and assuming the risk of losing your shares, that's something that's somewhere where IMST and MSTY come in handy in terms of being able to give you that dividend. The one caveat with that I would say is if you're going to be taking the dividend, and there's a lot of people that are very, very bullish on DRIP, so they're just going to take the dividend, reinvest it into MSTY. The dividend grows, take the dividend, reinvest it into MSTY. In my personal opinion, you're somewhat defeating the purpose of a dividend. The idea of a dividend is to take it, you take the tax liability on it, and then you live off of the proceeds, right? You use those proceeds to cover daily expenses. If you aren't doing that, you're somewhat defeating the purpose of the dividend in the first place. And in theory, could you take a play like a MSTY and then take the dividend payment and you put it into MSTR or one of the other leveraged Bitcoin equities? Sure. So and in that case, you're using it in a somewhat different fashion, so that's equally valid. So what I would just say is that there isn't one way. I think it's a very, very individual decision that a lot of people are trying to push forward a narrative on what they think is the best approach. But it's very, very much an individual decision. And I think that people need to see it as such and not get swayed by what's online. Just understand the risks and understand the trade-offs and cost benefit.
Yeah, I think it's a really worthwhile call out, what you just said, which is that if you're just dripping the dividend or the distribution back into more MSTY, then you're taking the tax hit and you're not just growing it tax-free, like if you were holding MSTR. So you might, like, if you're going to use that vehicle, you should be living off the income, and maybe you keep a portion of the drip on just to make sure you protect against the threat of NAV erosion. But and I really like the idea of taking the drip and either buying Bitcoin or MSTR with it as well, rather than dripping back in. So like maybe 20% of your distribution you drip into MSTR and or cold storage Bitcoin, and you live off the 80%. But I agree, if you're trying for growth, then you want it to be growing tax free, and we already know that MSTY is not going to outperform MSTR on growth alone, so might as well be growing in the faster growing vehicle in a tax-free way. So yeah, it's a really good call out, Adrian, because I think a lot of people are just dripping and they think that that's the money glitch. But I think maybe end of year taxes are going to come due and they're going to have to rethink things for the following year.
Yeah, and that's why I say it's very, very individual, right? And so even if I use myself as an example, I was fortunate enough to be able to take out a loan against my Bitcoin, which I then invested in Strategy. The gains from Strategy allowed me to pay off the loan. Then I just did another one, and then I just did another one, and then another one. Right now, if you think about it in terms of costs, that loan I took out is not taxable. But the gains I get on the MSTR from that loan are taxable. So I pay the taxes on that, right? And I also am able to pay off the loan. I'm able to keep the difference. Now, with the run-up we saw in Strategy, that was very, very beneficial. In terms of currently, it is not as if we're going to see a run from sub $100 to 2,000 again anytime soon, proportionally, right? So it becomes a different conversation when you have to think about it in terms of how much of a return am I going to see? If I'm just dripping constantly, just recycling, sure, your dividend is growing, but you're not seeing that. You're not getting it. You are essentially just reinvesting the proceeds. Now, this is not me knocking it. This is just me urging people to really think about it. If you're doing a dividend play and you're not taking the dividend, and all you're doing is increasing the dividend in perpetuity, and you're not taking it, what is your exit strategy? What happens when we see a bear market and the price for MSTY per share drops and the dividend drops and all of those proceeds, all of that benefit that you would have had is now gone? In addition to the tax burdens you took proportionally all the way through that process. It is just something that I think people need to sit down, and as lame as it sounds, I've done this, sit down with a spreadsheet, create a few columns, and just crunch some numbers and see what you come up with. Don't make decisions that are reactive.
Yeah, last thing I'll say on this, and then I know Mason's got a next question for you. We'll move into kind of these other levered Bitcoin equities. But when the end of the year tax bill comes due, you're probably going to have to sell MSTY to come up with the cash to pay for that tax bill. So all those shares that you were dripping back in rather than benefiting from, you're going to have to just give it back to the tax man in a way.
What I will say on that, I always tell people Uncle Sam wants his cut, but he takes installments. So just because you have a huge tax bill doesn't mean you have to pay it up front. And if the thesis we have for Bitcoin is true, which we all believe it is, and Bitcoin is only going to appreciate in time, which, it likely will, don't be afraid of that tax bill, right? Don't be afraid to take those profits. Take the profits, pay a little bit of interest on that tax bill with understanding that you can just wait it out with your Bitcoin holdings or strategy holdings appreciating over time. Right? But with MSTY, it's a little bit different, granted, because you're getting those dividends and you're just reinvesting them and you have to pay on those dividends. So it's a lot messier with MSTY. But don't be afraid of tax bills. Just work them out. Go get an accountant, pay $1,000, $2,000, whatever it is. Get a financial advisor as well, even if you only use them on a biannual basis, and sit down with them and come through with a way to anticipate what a tax burden will be, think through payment plans ahead of time. Don't just wait for a tax bill to hit and then just say, oh shit, and wonder about how much money you're going to lose. Like, think about this ahead of time. Understand the tax bill that you have. You can pay in installments. Don't get sticker shock. There's ways to think about everything.
Over the last few weeks, there's been a lot more entrance into this Bitcoin equity game. In my opinion, it appears to be accelerating at this moment. We had Jack Mallers and 21 Capital. We had David Bailey and Nakamoto Holdings, Strive and Matt Cole. There's a bunch more that I didn't list. But what other leveraged Bitcoin equities are you considering for your personal portfolio?
So this is where we have to get into NFA territory. I'm not giving anyone financial advice, but I'm interested, and I'm not going to necessarily say which ones I hold necessarily, but I am interested in Semler. I am interested in MetaPlanet. I do think Strive is interesting as well, and in terms of what is the best investment, that's more of a subjective question, right? When assessing these, I always think about what's the plus. What are they giving you that strategy isn't giving you? Now, in the case of MetaPlanet, in my view, that you have a leveraged Bitcoin equity that is opening up the Asian market, right? You're going to have an entirely different market, entirely different dynamics at play that bring different potential into the market, right? You can very, very well see MetaPlanet being something that the Japanese market and the Asian markets see as a way to get exposure to Bitcoin without directly holding the equity themselves, right? Much like, a lot of American investors see strategy. In the case of Semler, you have a company that was very successful before they adopted a Bitcoin Treasury strategy. They had seen incredible stock price run-ups long before a Bitcoin Treasury strategy, and they have an operating business that is successful. Now, they've taken some hits in recent months, but all businesses take hits. It's a matter of how they recover from the hit and how they move forward and what plan do they have, moving forward. And I've spoken with Eric Semler. I've spoken with him on numerous occasions, and he has never once given me any reason to think that they are not going to remain committed in their path. So that is the benefit of something like a Semler. If they stay committed to the path, they have an operating business that they can scale. What kinds of multiples will they see? How will the market respond to that? What kind of performance will they get? Those are all the kind of questions you have to ask yourself. So even though it's accelerating, I think we're still very, very early. I know some people have been making calls that the Bitcoin Treasury, leveraged Bitcoin equity would be this cycle's bubble, right? I think we're a ways away from that. We only have a handful of companies that have adopted this model. If we were already at the point where we had hundreds or thousands, you might have me. But at this level, I don't think that we are creating enough leverage in the system to create systemic risk right now for the Bitcoin market and for this leveraged Bitcoin equity economy, I guess you can say. I don't think we're creating enough leverage yet, even though they're using debt to finance the purchases. I don't think we're at a point where there should be concern. Now, if there's a larger economic scenario that comes up, I think that changes the dynamics somewhat, but that changes the dynamics for everything. So, long-winded answer, I like Semler, I like MetaPlanet, I like Strive, I like a few others. Quite frankly, what I'm doing right now is I'm assessing these as a new form of a 60-40 portfolio in terms of a leveraged Bitcoin equities. But what I will say to everyone watching this is my Bitcoin holdings are still significantly larger than my leveraged Bitcoin equity holdings, right? There are some people that are all into LBEs. That's fine. I'm just making everyone aware that don't take your eye off the ball. Bitcoin is the ball. And these leveraged Bitcoin equities, they are adjacent plays. They are plays on top of Bitcoin, but don't take your eye off the ball.
Strongly agree with everything you just said. It's hard to convince me that we're in a bubble when, like you said, we are still so early. It's still just a handful, maybe a dozen companies. And what worries me the most is these companies claiming to have Bitcoin that they don't actually have. That would definitely be an issue. But I hope that we have learned from previous mistakes. But, as every cycle comes through, that doesn't seem to happen. So my fingers are crossed.
With that though, for me, and maybe this is me being naive, I don't think we're at a FTX. We're not going to have like a FTX kind of situation. Here's why: FTX was unregulated offshore. They were just doing whatever the hell they wanted to do, right? They were playing all kinds of leverage games. Quite literally, yes. I mean, we've all read the stories. So they were quite literally just making shit up as they went along. These companies, these publicly traded companies, they're regulated by SEC. They have to go through internal audits. They have to go through all kinds of third parties to even bring this to market and not be accused of fraud. Because if they were issuing equity to the market, or you doing a SPAC, or doing a capital raise, or a convertible note, they can't just say we're doing it and trust us, we're going to buy the Bitcoin, right? There's going to be a paper trail for all of this. And there's going to be a paper trail that they have to produce at some point. So I don't see it in the same vein as an FTX. And again, people come up with the leverage conversation and whatnot. Well, as much as people don't want to hear it, business is business. Some of these companies that are adopting this model, a couple of them are going to fail. A couple of them are going to have to pivot at some point. It's going to happen. It's just the law of averages. But that doesn't necessarily mean that it's a bubble or it's going to create systemic risk. One company failing, or two or three or what have you, and them having to sell some Bitcoin, that says something bad about the company and how they manage the strategy. That doesn't say anything bad about Bitcoin.
We'll know we have an FTX out there somewhere when the reported combined Bitcoin Treasury position exceeds 21 million coins. And that might
That would be a big red flag. That would be a big red flag.
And I wouldn't dare these companies try to do that and dare the internet sleuths and MicroStrategy True North crew to go and track that paper trail and find out. I mean, I wouldn't dare them to do that.
Oh, well, so look, again, I don't want to toot our own horn, but a company doing that, we're watching these things closely. A company doing that, and there's others as well in the community that are watching things closely. Someone is going to sniff that out real quick. So, if they want to play those kinds of games and FAFO, I mean, knock yourself out. But this is not an FTX-like situation, and this is not a over-leveraged doomsday scenario that's coming. I don't think. We are probably going to see a correction. I don't think it's going to be 80% or 70% or anything like that. I don't think that Uncle Larry, aka Larry Fink, got into the market to weather 80% drawdown. I think the dynamics are different this time around. Yeah, and I know we say that every cycle, but I do think that things are fundamentally different this time around.
Mason and I have been talking about this on our own lately, which is like, what does it look like, assuming that this is a bubble, what does it look like when it pops? I think what you could say is that premiums come all the way down to just in line with net asset value, or maybe worst case scenario, companies have to start clipping Bitcoin to pay down interest expense for the borrowing that they did. But even that, like if they can maintain the majority of their position still and Bitcoin continues to appreciate, I mean, that's not really blowing up. That's just like, okay, maybe they bought a little bit more than they could handle.
Well, even in that scenario, and I made a comment, I forget to which post, but someone was saying that they think that this is the next bubble, right? That leveraged Bitcoin equities are the next bubble. And I replied that the dynamics of capital markets make that harder to happen than you may realize. And the reason why I said that is, let's say a company is, a publicly traded company. let's say that we are in a bear market and, they're getting to the point where people are asking, are they going to have to sell some of their Bitcoin holdings? Are they not going to have to sell some of their Bitcoin offerings? They can just do a small ATM equity offering, depending on the company, and raise the capital to keep themselves afloat. There's all kinds of different things that can be done to prevent an event where they would need to start selling their Bitcoin to keep the lights on, so to speak, right? So I do think that the reason why this is fundamentally different is because operating companies have a lot of different levers and a lot of different avenues that they can look to raise capital and to keep their holdings intact and to not have to sell their holdings. And it's not as if there's going to be a massive dumping in the market with these companies if we all of a sudden have a big drawdown. First of all, if we have a drawdown, it is not as if they're just going to be sitting there, twiddling their thumbs, looking at the price and not taking steps. They're going to be probably, let me be very specific here actually. If they are not completely and utterly bereft of any logic whatsoever, they're going to be looking at this happening and they're going to be starting to make plans to adjust to it. Even in that event, I do think that there's still going to be a couple that fail. I do not think they're going to be to the level of a strategy. Because as we just discussed, no one is at the level of strategy. They have a giant moat. So let's take strategy as the example then. Let's say we have an 80% drawdown and then people are like, oh, strategy is going to get liquidated. Well, once again, the debt is unencumbered. They own that Bitcoin. All they have is the debt. They can refinance the debt. They can push the debt out. They can do ATM equity offerings to pay the principal on the debt down. There's all kinds of things that will happen before a big blow up or a big bubble pops. And also, bubbles typically don't pop and then reinflate bigger. We already saw strategy survive the 2022 bear market, right? And I'm sure you guys remember that was nasty. There were companies dropping like flies. Strategy still persisted through that. So I do think that the calls for doom need to just be tempered somewhat.
It's such a good point that, because strategy has kind of led the way here, they've shown these other emerging levered Bitcoin equities that they should not securitize, or that they should not take on encumbered debt, that they need to make sure that they're levering up the balance sheet and not the actual Bitcoin holdings, something that Jeff talks about a lot, which is just a really interesting way of looking at it, is that they're levering up the balance sheet. They're not actually levering up the Bitcoin themselves.
If MSTR expands into foreign markets, like, for example, Japan, they have MetaPlanet, would that change your outlook on these other Bitcoin equities we mentioned?
No, I wouldn't. So again, this comes back to strategy's moat and strategy's position and the strategy economy. Strategy is a one of one. So that's the first way that I see it. In terms of all the other leverage plays, let's be frank, people are going into them assuming outperformance from what strategy can do. Now, can they outperform? In theory, yes. But again, what's the plus? MetaPlanet has its own unique purview and people that have their own unique purview on it. Semler, much the same, Strife, so on and so forth. I don't think that it diminishes their value. I just think it does put pressure on them to differentiate. And some of the ways that they can try to differentiate is, are they going to have offerings that strategy does not have? Are they going to bring a product or offering to the market that strategy does not have? Are they going to start acquiring Bitcoin in a different way? I do think that, in my view, just based on conversations that I've had with several people, that companies are going to start looking into using AI and machine learning to start acquiring Bitcoin in a more accretive fashion long term. Could that be a differentiator? Could the leveraged Bitcoin equity that has an entirely algorithmic AI-driven approach towards buying Bitcoin and getting good entries and whatnot be seen as a differentiated play in the market? I have no idea. There's all kinds of different ways to look at this, where these companies can find ways to differentiate themselves from strategy. So while strategy pushing into other markets and expanding could theoretically put pressure on it, the thing we also have to remember is that Bitcoin is at the basis of all of this. All of it turns into number go up. if strategy is applying pressure and they're expanding into the market, and then these other companies exist in the market, and Bitcoin is expanding, and Bitcoin is gaining more adoption, and Bitcoin is growing in price, strategy, getting larger doesn't impact them because their balance sheet is going to be bolstered just as much as strategy's is. It becomes a cooperative model besides a adversarial or combative model of doing business. And I think we're more likely to see cooperation for these leveraged Bitcoin equities more than outright competition.
And Saylor even said as much at MSTR World. He said these are basically turbines on the Bitcoin network, which is a really interesting analogy. So obviously, with what you guys are doing at MSTR True North, Strategy has this digitized investor relations. You guys have really filled that gap, and MetaPlanet has seen and is starting to see an increase in kind of their digitized investor relations. But if you were to guess which levered Bitcoin equity, or I guess even just a Bitcoin treasury company in general, you think is going to get the MSTR True North treatment next and have that community built around it, which company would you guess that will be?
I would guess Semler, just based on their position in the market. Eric has been, doing appearances. He's been trying to be more front-facing. He's been trying to be more vocal. So I see that as a natural progression. I started the responsibly long Semler community. So, and I've had, conversations with Eric on numerous occasions, with Renee Cormier, their CFO, on numerous occasions. So I do see that as a natural progression for them to start having that kind of exposure. I think that, they had the little bit of a bump in the road with the lawsuit and whatnot. But now that they've cleared that hurdle and they can start looking forward, I'm sure you've seen that they've started making Bitcoin purchases. And there's a small but very passionate investor base for Semler. And I can see that happening. Now, is that going to be, a dedicated show or something like that? I'm not sure. But do I see more content probably for them coming in the pipeline? Yes.
I love that answer. We had Eric on the early days of New Foundations. I believe it was his second podcast appearance, and it's been really great to see him come up the curve, if you would, in terms of Bitcoin, because when we had our conversation, he was more just seeing it as digital gold, and that may be the case still today, but with gold rising, I really think he is starting to expand his price target for Bitcoin in the way that they're accelerating their accumulation. So I would love to see a True North style community around Semler. Moving on to the last few questions we have for you. These are going to be more fun questions. We like to save them for the end. So topic switch, but what would be your Bitcoin advice? How would it differ between an 80-year-old and an 18-year-old?
It would depend. Is the 80-year-old broke or do they have savings? And is the 18-year-old broke and do they have savings? So if it's the 80-year-old that's broke, I'm going to say, keep yourself healthy and try to accumulate as much Bitcoin as you can to beat inflation is the best way I would say it. At that age bracket, there may not be as much of a need for Bitcoin because the person is already living at their means at that time and they've kind of tailored their life around that. So it'll be a very, very different conversation. If it's an 80-year-old person that's diversified and has a lot of investments, this will be something where I can say that, yes, it's highly volatile, but, on a year-over-year basis, the CAGR is going to justify that volatility. And it makes sense to have a small allocation in your portfolio. I might keep it that simple. Someone that's 18, they say inflation goes up 2% a year, but in reality, it's probably more like 8%, the way things are going. So someone that's 18, they're going to watch their purchasing power evaporate. They're going to go from being able to afford some guac on their burrito at Chipotle to maybe not being able to get a bag of Doritos the way things are looking. So they're going to need to have an entirely different, perhaps more aggressive approach, to which I would tell them, and as bleak as it sounds, work as many jobs as you can, get as educated as you can for as little as you can to accumulate as much Bitcoin as you can, and make sure you hold on to it. That is going to be your savings vehicle throughout the decades. And of course, it's harder to convince an 18-year-old of that because most 18-year-olds don't have that, forward-looking view. But I think that's the simplest way I can answer that question.
Yeah, I think for the 18-year-old, I've heard so many stories about people who find a job that allows them to listen to audiobooks and podcasts while they do the job. So like some kind of a manual labor job, an Uber driver, whatever, and they've got, Sailor in their ear and they're doing their 10,000 hours of Bitcoin while they're, stacking or mining fiat to buy Bitcoin. So I think that's kind of a clever approach. If you feel like you don't have time to do the learning and the work, there are certain jobs where you could probably combine the two.
Potentially, yeah.
Yeah, and I'm not sure how familiar you are with multi-institution custody. It's what we encourage the companies we work with as kind of the most secure form of custody, where they don't have to manage private keys in-house, and they have three separate legally distinct institutions, each a key holder, and they basically do a 2 of 3 authentication with each to move funds. And the reason I mention that is because of this next question is, even if you don't hold keys, the three of us, everybody at MSTR True North, so many people are becoming these public-facing Bitcoiners. And I'm curious, as Bitcoin runs to 500K and then a million a coin, how do you think about your personal security? Because even if you're not holding your keys, or you say that they, fell out of the boat or whatever it is, it just takes a criminal who saw your face and saw, oh, this person is in Bitcoin, to come knock on your door one night. So I don't know, how do you think about it? Are Bitcoiners in the future going to all be moving around with private security? How is this going to play out?
So, and again, this is more of my life view. I think that if you go through things in a position of fear, you welcome the very thing you fear. But if you go through things in terms of preparation, you're prepared for what may come. And the reason why I say that is this: if you are a public-facing individual that is in the Bitcoin space, I think it behooves you to really start thinking about security. And I don't necessarily mean like private security. I do think I mean not having all your eggs in one basket, right? So multi-sig, multi-institutional sig, things of that nature, I think makes sense in that kind of an environment. If you are in a scenario where someone is trying to, perform a home invasion of some kind, that's entirely different, and that requires an entirely different understanding of security. Michael Saylor has private security. He has security around him, but the thing is, he's also quite a bit different than the three of us, right? So, but if it gets to the point where Bitcoin is millions and millions of dollars, and people just assume that you have it, there's I'm of two minds of it. The first mind says, at that point, people are going to know that it's not as if you have it in your pocket and you can just give it to them, right? They're going to be somewhat more aware that there is a secure aspect to what Bitcoin is, and it's not just a matter of stealing it. Then I do think that there's going to be services that are doing on-chain security, where in a sense of they're monitoring your transactions as you do them. So it's not just you're going to have multi-sig, but as you send the transaction, someone's going to be monitoring where it goes. So you're going to have a multi-sig and someone like, Acropolis, River, Unchained, whatever, existing as that third party. Then you're going to have another third party monitoring that third party. So in that kind of an event, I do in that kind of a world, I do see that happening. But personal security, quite frankly, that is something that just may come with the territory. You have actors, you have actresses that people know that are wealthy. You have professional athletes that people that know, and people know that they're wealthy. They all have security measures, and I do see a future, if Bitcoin does, what we think it's going to do. We could see a world where, private security for financial individuals that are public facing becomes more ubiquitous for common citizens. Because a common citizen right now that has one Bitcoin, he or she has, significant holdings. But you fast forward this 20, 30 years, and Bitcoin's like 5 million, 10 million, so on and so on and so forth. People could see them as a target if they are forward-facing, if they are public-facing. So, I think common sense practices will go a long way.
Yeah, something for everyone to be thinking about and preparing for, because that gradually then suddenly moment, you never know when that will be. If you had to pick one person from MSTR True North to manage you and your future bloodline's wealth and investments on your behalf with no input from you forever, who would you pick out of that group and why?
No one. I would never, ever allow anyone to manage my finances with no input from me. But let me play along. If I were to pick a member from True North to manage my finances with some input, not without input, I would say probably Ben Workman is what I would say. And I say that because he and I talk about financial issues on a daily basis behind the scenes, right? So we think similarly. We align on a few different things quite well. So I see him as the logical choice. And depending on how aggressive I want to be, if I want to perhaps maximize gains with the potential for playing the options market and whatnot, it'll maybe be Dan Hillary or Soleil in MSTR True North that to manage that for me. Those are three individuals that I can think of. One primarily to do the general management, but if I was being more aggressive and I wanted to look at things from a different angle, I'll probably look at Dan or Soleil.
Yeah, maybe I should have asked that in more of like a portfolio split way. Like you have to break up the portfolio amongst these guys, but I would have had to give you more time to prepare for that one.
Yeah, I would never ever ever allow anyone to manage my finances without input from me. I just wouldn't. That's so I have a financial advisor, but it is a partnership, and he helps me manage my portfolio. He does not do it at my behest. I was very specific when I picked him to the kind of relationship that I wanted, right? Also because I have what they still consider non-traditional investments in terms of Bitcoin and now strategy and so on and so on and so forth. So if I'm looking for someone to give me input on something, not necessarily manage it for me hands off, that's what I have my advisor for.
I know we could dedicate an entire episode to this topic, but given your background, I'm really excited to hear your answer. Is the Bitcoin quantum threat overblown?
Yes. Yes. So, and let me try to give a less technical answer. After what people have to understand is that many individuals that are speaking about the threat of quantum computing have not researched quantum computing. Many of the individuals speaking about the threat of quantum computing don't understand quantum computing. They're simply parroting clips and little article snippets that they've seen and come across to get clicks and to get engagement. Someone that has researched quantum computing will have a more nuanced answer. The reason why I land on no is because over the last 7 to 8 years, I've been reading about quantum computing just because I'm a nerd and apparently a glutton for punishment. And I like going down these rabbit holes that take you into very, very painful topics, right? But the benefit of it is you get the knowledge of it on the opposite end. Now, the reason why I say it's overblown is because the nature of a quantum computer is more akin to probability than determinism. At the quantum state, everything is about probabilities, collapsing states, noise, so on and so on and so forth. It is ill-suited to being a brute force system that can attack encryption. As you scale quantum computers, you don't only run into the problem of noise, you run into the problem of the substrate, the very, very substrate, the very, very substance that they're built on, and being able to scale that in a manner that doesn't create more noise, and being able to scale that in a manner that doesn't inevitably cause collapse of all the qubits, because you're trying to scale this thing out to such a size in order to make it a actual threat to encryption. Now, quantum computers do have uses, but they're going to be very, very use specific, and they're going to be very, very specialized machines and used for very, very specialized cases. Brute forcing Bitcoin is not one of them. Also, people fail to realize is that if it can brute force Bitcoin, it can brute force everything currently. And mark my words, if someone were to ever come up with a quantum computer that can actually crack encryption, black SUVs will pull up on their office in the blink of an eye the second that news goes public. And they will be out of the public eye for some time before we see them again. That puts everything at risk. Is it going to happen? And that's me being flippant in my answer, by the way. Is it going to happen? I don't see it. After billions of dollars in investments, right now, you know what quantum computers can do? They can factor 15 and 21. We are looking at several hundred orders of magnitude of scale to be able to actually effectively crack encryption. Here's the other fun thing. That's to crack one wallet. There's just one. There's nothing that says that that can be reproduced. See, the thing about science is reproducibility. That's one of the main tenets of science. If a quantum computer can do it one time, that doesn't mean it can do it another 100 million times. So, and I can go on about this forever, but it is very, very much overblown. Do we take the steps to quantum resist Bitcoin in terms of a bit of a hard fork or an upgrade to the protocol? Do I think that makes sense? Sure, because that can protect Bitcoin into the distant future. We're talking tens of thousands, if not hundreds of millions of years, theoretically, right? But considering that we already have a potential for a solution for it now, the conversation just becomes, when do we do the hard fork? Less than, oh my God, quantum is going to hack Bitcoin.
Yeah, and to your point about the black SUVs pulling up, if some entity were to be able to do this, and it seems like Google has the lead right now, that is a highly regulated legal entity. It seems like a very bad use case for them to take that power and then break the law by hacking into somebody's wallet to steal funds. Seems like it's going to generate the wrong kind of attention from, like you said, those black SUVs. So it's not going to be some guy in his basement with a quantum computer, or at least not anytime soon. So we have to remember that these companies don't want that kind of legal backlash. And so hacking into individual private wallets doesn't seem like a great use of that energy.
Also, the market cap doesn't justify it. Like we have 1.2 quadrillion dollars of derivatives, but they're going to go after Bitcoin.
Right.
Even if it scales up another 100x, that still doesn't justify the kind of heat and the kind of effort that's going to take. So, yeah, it's very, very much overblown for technical reasons, practical reasons, social reasons, economic reasons. I can go on.
Legal. Yeah.
I completely agree with you, Adrian, and I'm very interested in this topic. So if the subscribers would like a dedicated episode, please comment below and we will make it happen, because I think there's a lot of discussion and FUD to be dispelled. Maybe something we should add, Chase, to our FUD playbook, our Bitcoin misconceptions playbook.
I actually wrote an article on quantum computing, and I have several other parts that I haven't drafted. I still need to write or finish. But if you're interested in it, I can send it on to you. Yeah, people that are discussing quantum computing and fearing quantum computing do not understand quantum computing. So, I don't think that we have anything to worry about when it comes to cracking encryption. I think that the use cases are going to be very, very highly specialized for other industries.
Okay, last question for you here, Adrian. We really appreciate your time. This one is weird, admittedly, but it had me, I kind of was chewing on it this last week, which is the idea that let's assume aliens come to Earth and they're looking at the planet and they're trying to find out what to value here. Should we assume that they value a shiny rock like gold? Probably not, unless it has some industrial use case within their own, infrastructure and technology. Should we, there's all kinds of natural resources that they may or may not value. And then there's Bitcoin, right? So should we assume that an alien species finds Bitcoin valuable? Or should we, to some degree, assume that if they made it this far, that they probably have already figured out the double spend problem and have their own version of a Bitcoin with a much longer time chain? And so I guess it's a very theoretical question given, but would an alien race find Bitcoin valuable?
Likely no. And I say that, and again, it's a weird question, but it's a fun question, right? So if we're assuming an alien species is coming to Earth, we have to assume the level of technological advancement that they would need to have, right? I think that Bitcoin is a prelude to an energy-based economy, is what I think that we're leading towards. And I would assume that a highly advanced alien species wouldn't have the same understanding of commerce that we think that we think they would, in a sense that if we just kind of project everything forward right now with AI creating deflationary pressure on everything, robotics will create increasing deflationary pressure. If you are a species that can harness enough power to traverse the stars, I would assume you would have likely solved issues like homelessness. You have likely solved issues of lack of food, lack of resources, because the kind of energy you would need to harness is on an order of magnitude that we can't comprehend, right? Which is why I think that any kind of economy that they would have would be energy based in nature, in the sense that they could quantify down to the energy substrates the cost of anything from every meal we eat to everything they produce to everything that they waste to everything is going to be a unit of energy to them, because at that scale they'll be living off of energy in one form or another. So I don't think that they would think of Bitcoin as valuable in its current form, but I do think that Bitcoin is a prelude to an energy-driven economy, because quite literally Bitcoin right now is an energy-driven economy, right? We have mining, we have outputs from mining, we have inputs from mining. We can quantify that down to the sat if we really, really had to, of how much energy it took to produce that sat. And I think that this is a natural progression that we're seeing. So while they wouldn't see it valuable in its current form, I do think they can see the future version of Bitcoin, whatever it may be, as valuable.
All right. Well, Adrian, this has been super interesting. You know, we pride ourselves here on coming up with questions that are unique or haven't been asked before. Hopefully you and the audience enjoyed. If you did and you're new here, please subscribe. We've seen some great momentum lately, and part of our job here at Acropolis and New Foundations is just spreading the Bitcoin word, educating founders and business leaders on Bitcoin and what it can do for your company. You know, if you care about this mission, please help us extend these videos across all platforms by liking and commenting. And Adrian, I want to give you the opportunity to plug where to follow you and find your work.
Sure. So you can find me on Twitter at Adrien_R_Morris. That's my handle. You can find me, doing live streams with the gentleman of True North and lady of True North. And yeah, that's the best way to find me. That's been the bulk of my activity on social media recently is tied to True North. And we are going to be doing a lot more exciting things in coming months. And we anticipate, being part of this overall global Bitcoin adoption journey for quite some time.
Love it. Thanks so much, Adrian. Appreciate your time today.
Thanks for coming on. And last thing, we mentioned it before the call, but congrats on all your success in the True North and everything you guys are doing. We really recognize it and appreciate it. So congrats.
Oh, thank you. I greatly appreciate it. Thank you.
Cheers. Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.